Good morning, everybody. Welcome to another day of the Market Report brought to you by Mike Bjork. Today is Monday, and it's July 27th. Wow, end of the month here already so far. Hey, we do got one important economic news release scheduled for today. This week will be chock full of economic news releases that will be important this month. Tomorrow will be the first day the Fed starts their meeting, the FOMC. We don't expect them to raise rates this meeting, but it might give us some inclination as to when they might raise it and by how much. Also, we got the first glimpse of the second quarter GDP coming up on Thursday, so it's exceeded that. So good numbers overall today. We saw a nice little pull out of May's slump into June, so good numbers right there. Stock market's down, even though we had some good numbers in the durable goods markets. Stock market's down, and it's taken its cue mostly from Chinese plunge. They actually dropped about 8%, which is a pretty big drop. A lot of this is stemming from concerns that they're afraid that the government is going to be pulling out of support by basically, because I guess they've been kind of supporting their stock market by buying into the stocks, and I think the government's not going to be continuing to be purchasing, or at least drop their size of purchases over there to keep things afloat over there. So meanwhile, it dropped about 8%, which is a pretty dramatic drop, and then Europe as well as the U.S. are kind of taking its cue from there. So far the Dow is down over 100 points so far today, which is kind of boding well for us on the bond side of things. As you can see here, we're up about 19 basis points currently from where we left off on Friday. Let's pull back a little bit. We tested the 50-day moving average, and we moved up higher. So that could help us create a floor of support to help boost us up further and continue our trend, this upward trend we've been seeing, which has been kind of slowly progressing since mid-July. For the last 2 weeks. So this has been kind of good news for us and could help us to see improvement in our interest rates, continued improvement in our interest rates. So we'll have to kind of wait and see. As we saw back right on the 103 60s level, we got bounced back down back in the early part of July. So we'll have to kind of see how that plays out in this next one. Alright folks, so we got an improvement in the rates, so that means better pricing today in interest rates, so that's good news today. Again, prepare for some volatility later this week with the tomorrow beginning the Fed FOMC meeting, and then their announcement on Wednesday, and then we got the GDP, first version of the GDP numbers for second quarter, which will be obviously important primarily because we had very bad numbers for first quarter when we showed contraction. Alright, have a wonderful day. Thanks so much for watching, and we'll see you guys tomorrow. Take care.